Welcome back. This is Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, this is a pre-recorded show this week. Time for a bit of a review. You'll be away when this show flights. And it's something that we actually normally do is have we have a half-yearly review, and it is, I guess, time for that to take place right now.
Well, that's it. It's the end of June, so we've been at it for 6 months, and it's now time to review the show, look back over the last 6 months, see how we've done, look at the goals that we set for ourselves right at the beginning of the year, and see how we're performing in terms of those goals, and then look at some of the trades we've done and unpack where we've gone right, where we've gone wrong, and how the whole show stacked up year to date.
Okay, well, remind us what those goals were, other than make as much money as possible.
Yeah, obviously make as much money as possible always is the end goal. But the thing is that's everybody's goal. You need to put some goals in place before that are actually goals you can have some sort of control over achieving. So the goals that are set, and they're the same goals that are set every year, but they seem to be quite efficient goals in terms of this show, are the 3 goals that are up on the screen there now. So I want to get 65% of my trades as winners. Effectively, 2 out of 3 trades need to be right. My winners need to be 3 times larger than my losers on average. Okay, and then the last thing is that I need to be patient for high probability trades. And that's key because it's always tempting to just trade because you want to be involved and you feel like you need to have some irons in the fire. But the reality is successful trading doesn't always involve being in the market all the time. It involves actually looking for the opportunities and then acting on them when they are there. So be patient for high probability trades, and that's the 3rd goal of this show.
Well, obviously we'll see how they stack up. Starting off with some of the stats, I guess the overall overarching stats of the show.
Yeah, so we've done 24 shows this year of Traders Corner in 2015. We've traded 15 times, which is actually quite high compared to previous years. To have done 15 trades by the middle of the year is quite a lot. We've been relatively active, actually. 10 of those 15 trades have been winning trades, which is excellent. 5 of them were losing trades. And the total return that we've had for the year to date is 32.59% as at the half-year stage.
Which, I mean, it looks as if you've kind of met the goals that you set yourself so far, or are on track to meeting them, put it that way.
Yeah, that's right. And I mean, I think we'll go back and mark ourselves in terms of those goals in a few slides' time. But definitely we are mostly on track to achieve those goals, certainly. And I think that, again, if you achieve those 3 goals that I spoke about, then you can see that money flows as a consequence. And a 32% return after 6 months in a market that hasn't done an awful lot this year is actually a very big outperformance. So I'm very, very chuffed with that performance for the first half of 2015.
Garth, I know often you create these histograms of the trades that you've put on for the portfolio, and you've got one there. So maybe just talk us through that. Yeah,
these histograms are always good in terms of being able to sort of put a diagram together of your profitability as a trader. So to explain the way it works, the axis on the left-hand side here represents the profit or loss on every trade. So that's the 0 line over there in the middle. Obviously, that's a percentage gain on capital above the line and percentage loss on capital below the line. Okay. And then along the bottom here, we've got the names of each of the trades. Obviously, certain weeks we didn't do any trades, so none is what the word says down there. That's where we've done nothing for the week. Now, the red bars on each of these trades, those represent the risk that we were willing to accept on any of our trades. The risk, as regular viewers will know, we never risk more than 2% of our account on any single trade. And as you can see, all those red bars there generally are fairly short, stubby little bars, and none of them are ever bigger than a minus 2% risk. The green bars are then the results of the trades after the fact, once we've closed it out and either taken a profit or a loss. So in an ideal world, what you want is a histogram that's got lots of these big, tall green bars to the upside, indicating that you made good, strong returns on capital with your winning trades. And then where you have losing trades, you have small, stubby little green bars to the downside, like we have on these couple of examples over here, where there were not very big losses to have been taken on trades. And certainly the losses didn't exceed the risk assumption that we had gone into every trade with. So that's how it looks. It's a pretty healthy looking histogram, I'm happy to say. And I think a healthy histogram always does translate into a healthy trading account as well. And with a 32% gain for the year to date, I think it's fair to say that our trading account has been pretty healthy.
So your average profits and your average losses?
So the average profit on all of those trades has been a gain of 3.75% on capital for our winning trades, and then the average losses for our negative for our loss-making trades was minus 1.74% of capital. So in other words, our winners were around about just over 2 times bigger than our losing trades. But what we need to just take into consideration, those situations that I've highlighted there with in terms of those bars, those relate to the option structures that we did.
Okay.
And in June, we had 2 put spread option structures, and then we had a top 40 long position, which we did against those options. So made it quite complicated, but those things do kind of skew the numbers a little bit. The reason they skew the numbers is that we had a long top 40 CFD position against those options, which lost us about 4.5% of capital on that individual trade. And I didn't have a stop loss in place on that because I didn't need to, because that long position was offset by options. So it was a slightly different sort of scenario. But nevertheless, if you take those 3 trades that I've isolated there in combination, they were, as a combo of the 3, they were profitable.
Yeah.
But nevertheless, that minus 1.74% of capital in terms of the average loss includes that minus 4.5% loss there. So if we actually removed that, our stats would look a whole lot better.
Yeah, in fact, probably 1.5%.
Yeah.
Garth, what always strikes me is that, individually, none of these are particularly big numbers. 3.75% return sounds, okay. But if it's consistent and it adds up and the portfolio just grows and gets bigger and bigger, then you sit with a 32.6% return by mid-year, which is really substantial. And it sometimes requires a bit of a mental shift to get from the little incremental amounts to that bigger position.
Yeah, that's it. You're right. You've got to just take small profits here and there and just try and make as much as you can on the winners. But actually, the key to success in this thing really is to manage the losses. And we're going to talk about 3 of our losing trades towards the end of this show, where we will show just how important it is to stick to the stop losses.
Okay, well, let's look at the performance of your portfolio against the All-Share Index, and I think it's probably fairly good.
Yeah, it is pretty good. So you can see the 2 illustrated there. The yellow line indicates our Traders Corner portfolio since the start of this year, and the blue line indicates the JSE All-Share Index over the same period of time. Now, we started the year with 250,000 Rand in capital. And obviously that has grown throughout the year to 331,000 Rand at the half-year stage now. That's up 32% for the year to date. Had you invested 250,000 Rand in the JSE All-Share Index at the same time, then that would now be worth 272,000 Rand, or up only around about 9% for the year to date. So the reality is we've outperformed the market by a factor of about 3.5, which is really significant over a 6-month period.
And what's interesting is probably at the beginning of the year, you might not have anticipated this. Well, certainly the first trade actually was a position on the Rand-dollar exchange rates, which kicked us off very, very nicely. Yeah. But before then, remember, towards the end of last year, you were saying it could be a very difficult year for us. A choppy year, a tougher, maybe more bearish, and we haven't really been tested in that environment. So.
Yeah, we may still get tested in terms of that in the latter half of this year. That's possible. But certainly for the first half of 2015, it's really been a great story. And I think, sticking to the basic proper trading principles that we always do on this show have really stood us in good stead. And you can see it in the performance here. Okay,
before we get to the losing trades, how do you feel then that you've stacked up against the goals that you set yourself?
Yeah, so let's quickly look at them. The first goal, get 65% of trades right as winners. Well, we got 10 out of 15 trades right, so that's 66%. So I think we can definitely give ourselves a tick in terms of that. So certainly achieving that goal spot on. The second goal, winners need to be 3 times bigger than the losers on average. Look, our winners were on average 3.75%, and our losers chalked up as minus 1.74% on average. But remember what I said about the one loss being related specifically to an option structure, where it's a bit of a difficult situation or a different scenario there. So I'm actually going to give us a tick for that, because I think if you exclude that one top 40 CFD trade, which was part of the option structures, it would improve those statistics dramatically. And by and large, on the directional trades that we took, where we were either long or short in a particular direction, we've actually done very well, and by and large there, our losses were our profits rather were 3 times larger than our losses were.
And then what about patience? Because as you said at the beginning of the show, 15 trades, and it doesn't sound like a lot, but it is actually quite a lot, and it certainly has probably been higher than in the last couple of years.
It is higher. At the half-year stage, it's definitely higher, but I think we've still been relatively patient. We've had 24 shows, and we've only done 15 trades during that time. So it's certainly not like we're overtrading this account. We've been very patient. We've been selective on the opportunities that we have traded, and I think generally speaking, our patience has been rewarded here. So again, I think in terms of that, we can give ourselves a tick and say, well done.
Thumbs up.
Thumbs up, and
it's great
so far so good.
When the boss can give himself a tick.
Yeah.
All right, Garth, where you wouldn't give yourself a tick, where it's lots of red marking all over the paper, talk us through the losing trades, although maybe you wouldn't necessarily consider them losers.
Yeah, I actually would. Well, they are losers, but I would consider them successful trades, and I'll explain why. So we've got 3 trades here: Resilient, Capitec, and Mediclinic. These are trades that we did during the year which didn't work for us. So the Resilient one first we did on the 14th of April this year. Now, if you have a look there, we had an upward sloping channel evident there. The share price consolidated sideways for a while and got to the bottom of this channel. And I felt that it looked at that stage, it was oversold and it was looking like it was going to have another leg to the upside. So I went long on that basis, and we bought 1,000 CFDs of Resilient at 104 Rand 20 with a stop loss at 102 Rand. Now, that ended up being stopped out. In the end, we got out at 101 Rand 90 and we lost 2,800 Rand worth of our capital. Certainly not the end of the world, and as we always do on this show, we stuck to the stop loss and we got out and we walked away. Now, had we held on to that position up until sort of the middle of June recently, where the market sold off, that loss would have escalated to a level of 18,500 Rand. Sure. So it would have been substantially bigger than what it was if we hadn't have cut the loss. And I know I've said it so many times, but this is another example of the proof that keeping the losses under control and making sure you contain the losses is a big, big secret to success as a trader. And that's one of the things I'm proud to say we've done right over the 6 years that we've been doing Traders Corner. We've always managed our losses very, very strictly, and we've never allowed a loss to get out of hand.
Yeah, I mean, you've never deviated from that strategy. What about Capitec and Mediclinic? So
Capitec we did in early May. It was the 19th of May, actually, that we traded this. And it was following the announcement that there had been a book build. I think the PIC sold out of a large stake in the company. And there was a bit of a gap down in the share price. And we felt that there was an overreaction here. We were looking at a 3-day rule trade, looking for that share price to bounce. And it actually did bounce. We went long of 470 CFDs at 514 Rand. Now, I was looking for a much bigger move up here. I was looking for a move back to about 580 Rand. And that never materialized. The share price actually rolled over and started to turn south again. And in the end, we closed that trade out at 512 Rand 53. So we didn't even let it get to the stop loss level. As soon as it started to go below our entry price, in this case, I cut. Yeah. And we got out with a loss of 1,865 Rand here. Now, recently, that share price has sold off even harder. And if we had left it out to the middle of June, where we saw it down at sort of below 470 Rand recently, that loss would have grown to 22,000 Rand. So it could have been much, much worse, more than 10 times worse, if we hadn't have actually executed that stop loss.
And finally, Mediclinic.
Mediclinic, also a trade that we did in May. I saw a nice steady upward trend that had been in place for the whole of last year and this year. The share price pulled back to uptrend support, and I went long of 1,400 CFDs at 109 Rand 40 with a stop loss at 107 Rand. Now, in the end, we were stopped out. We got out at 106 Rand 72. We lost 4,500 Rand on that trade. But had we not stopped it out and we had left it until recently in the middle of June, where the market sold off even further, that loss could have escalated to more than 17,000 Rand. So the point I want to make here is that these are 3 trades where we lost money. Had we not abided by the stop losses, where we lost a very small amount of money on each of those trades, collectively these 3 trades could have lost us 60,000 Rand. Just those 3, which would have wiped out 3/4 of our profit for the year to date. So it's again an illustration that stop losses are absolutely essential, and they're very, very effective in terms of managing your risk and ensuring your profitability as a trader.
Yeah. Garth, unfortunately, we've run out of time, so we have to leave it there. But maybe we can talk about whether we can repeat this performance in the second half of the year in next week's show. And upcoming course dates will be on your websites. They're in July and August, so
yes,
people can have a look if they want to check them out.
Absolutely.
Yeah. Okay, we have to leave it there. Garth McKenzie is founder and editor of Traders Corner.